Moving on to our next story now. Banks have pledged more protection for homeowners as mortgage rates soar after the Bank of England increased interest rates to a whopping 5%.
Banks and building societies are going to offer more flexibility, allowing borrowers to temporarily change their mortgage terms, for instance, to go something interest only for up to 6 months if they're struggling to afford the new rates. I wonder how they'll prove to their mortgage lender that they're struggling.
Well, we'll find out soon, because following yesterday's meeting with the UK's leading banks, Jeremy Hunt stressed that the 6-month flexibility on switching terms would not affect credit scores as it may have done previously.
Is it enough, though? Or could the government be actually doing much more to help people struggling with mortgage payments? Joining us this morning to discuss it is political commentator for Young Voices UK, Ben Cope. Hello, Ben.
Good morning.
Are you a mortgage struggler, or are you going to be?
Unfortunately, I haven't managed to get on the mortgage ladder just yet, so I'm not. But I've been following it very closely because it's clearly a massive issue facing the country right now.
Are you one of those, a bit like a couple of my sons, who think, thank goodness I didn't get a mortgage when I wanted one a couple of years ago, because now I'd be in real trouble,
Yes, I'm part of that sort of slightly strange age group where, you know, while you realise that it's a very bad thing for the country, for me personally, there may be some benefits to some falling house prices right now.
That's worth pointing out, Ben, that the scheme is voluntary. At the moment, Barclays and I believe HSB have signed up for this, and obviously there'll be pressure on others to follow suit. But it is a pretty good thing, though, right? If you're on a chunky repayment mortgage, a couple of grand a month, go to interest only, no penalty, no credit rating affected, you could be saving £1,000 or more. So that's a good thing. But I have a caveat. Are people saving that money going to splurge it on other things and drive inflation up anyway?
Well, that is exactly the question that Jeremy Hunt would have been asking himself as he weighed up how this scheme should work over the last few days, because they're very aware that as interest rates have risen, as you said, the Bank of England raising interest rates by 0.5 percentage points this week, taking them to 5%, increasing mortgage rates to unaffordable levels for many people. They really feel a need to intervene to do something as mortgage repayments just get higher and higher and higher. But at the same time, the reason why the Bank of England are increasing rates as they have been is obviously to curb inflation, to make debt more expensive, to try and suck some money out of the economy. So yes, this is an inflationary measure in inflationary times by Jeremy Hunt, and while mortgage holders will be no doubt relieved that they are going to be receiving some options of support, a lot of other people in the economy, no least renters, will be frustrated that, you know, that they're not receiving any support, and this will just prolong the cost of living crisis for them.
Well, they are in a way, I suppose, because everything has a knock-on effect, doesn't it? And there are many buy-to-let, and people renting are paying landlords, aren't they? And if those landlords get into trouble because they can't afford their mortgage payments anymore, then the rent goes up. So everything has a knock-on effect, I guess. I don't know what you hear from other people in Young Voices, but there's a report in today's Times saying a quarter of middle-class parents are stepping in to help their children cover the cost of their mortgages already. Some are making sacrifices to their own retirement plans or selling spare assets, such as a second car, to ensure that their children can continue living in the homes they've just bought with a mortgage they can no longer afford. Do you hear that at all?
You hear a lot of it, and you also hear a lot of parents where they can trying to help their children get on the housing ladder, whether that's through the initial deposit or some early repayments. You know, these are, as we've said, really difficult times for mortgage affordability, particularly for young people who potentially don't have as much savings to fall back on. So yes, there's definitely a bit of a sort of voluntary generational wealth transfer here, with parents feeling the need to step in and help their children during this really difficult mortgage crisis.
Yeah, the bank of mum and dad, Ben, is a very important bank for many people, and they're not ones to get an interest holiday. I wondered, I was in Barnsley on Thursday night with about 100 GB News viewers. Nigel Farage show, Michelle Juby show was up there. This topic came up, and people are furious about interest rates climbing and climbing. And a lot of people there, Ben, were blaming the Bank of England themselves. Printed £900 billion, more or less, during the pandemic. Quelle surprise. You know, inflation has gone up. How much do you think we're being penalised for their own mistakes?
I think the Bank of England has a lot to answer for here. As you said, there was a lot of money printed during the pandemic, and of course coming off, over a decade of quantitative easing following the financial crisis. But I think the main thing was just how, the Bank of England is meant to be a forward-looking institution, because obviously whenever they increase interest rates, there's a transmission mechanism where it takes some time for the interest rate rises to filter through into the economy. But every time it seems like they've been playing catch-up, reacting to the latest news. Obviously, this week we saw them raise interest rates by more than was forecast, one day after higher than expected inflation figures. So it's always felt like they've been playing catch-up. Earlier, I think it was March 2021, Andrew Bailey, the governor, said that he thought that inflation was going to be transient. I think only in March this year he said he thought that inflation was going to be falling very quickly. So, and his statement yesterday was very odd. He was blaming employees for demanding higher wages. He was blaming companies for profiteering from the pandemic. But the one person who didn't seem to be at fault was Andrew Bailey, the person who presumably should be responsible for the UK's inflation. So I think, yes, he has an awful lot to answer for, and a lot of people will be looking at his term date as governor, which is supposed to go on to 2028, and thinking, is that really a viable term for him to see out?
Yeah, I mean, so many people are calling for his head, aren't they?
Yeah.
It's great to talk to you. Thanks very much indeed. Sorry you're not on the property ladder yet, but maybe it's the best that could have happened in the circumstances, as you're having to say to so many young people at the moment. Thank you.